Welcome to StaffWorks Explained, your portal to discover and understand events, activities, issues, and projects which span the globe but with a spotlight on what is happening in Africa. In today's video, we'll be talking about East African crude oil pipeline, a pipeline that is being constructed in Uganda for purpose of evacuating its oil from the western mines all the way to the Tanga port in Tanzania for export. As we know, this project is being financed through equity and also loan. The 3 billion equity has already been availed, and the project, some of the project activities have kicked off. One of the main challenges that this project is facing is the debt element of this financial composition. One bank that has promised to fund this project is SINOSURE Bank of China. Other financial institutions have shied away from financing this project due to its complexity and also the fact that it's dealing with fossil fuel, the types of projects that many banks and also financial institutions are shying away from, given the complexity of climate change in the world. The questions that we'll be asking ourselves here is, will SINOSURE live up to its promise in funding this project? Why is it delaying in making a commitment to fund this project? It has been months now, and what can Uganda do to overcome these challenges? SINOSURE is being considered as a potential financier, providing debt financing alongside the China Export-Import Bank. SINOSURE, or the China Export and Credit Insurance Corporation, is a state-owned enterprise in China that operates as the country's official export credit agency. It was established in 2001 and it falls under the jurisdiction of People's Republic of China Ministry of Commerce. Its primary purpose is to facilitate and enhance Chinese companies' international trade by providing various insurance and financial services. Some of the key functions of these institutions include export credit insurance, risk mitigation, where it plays a crucial role in mitigating political, commercial, and credit risk which are associated with international trade transactions, and by offering the insurance coverage, the SINOSURE helps Chinese business navigate the uncertainties of global market. It offers financial support where it facilitates financing for the Chinese company engaging in overseas projects through collaboration with financial institutions. So this support is particularly vital for large infrastructure projects such as EACOP, as well as those that are in the Belt and Road Initiative. It also plays the role of trade promotion as well as government banking, where as a state-owned enterprise, SINOSURE operates with the backing and support of the Chinese government. Its role aligns with the government's broader economic and trade policies, contributing to the country's international economic engagement. As per now, it remains uncertain if SINOSURE will fulfill its funding commitment to East African crude oil pipeline. The decision is delayed, and the concerns arise due to potential blowback from financing project, which is facing a business risk. The challenges include environmental activism, climate issues, and slow internal processes within SINOSURE. The delay in financial close raises doubts about its commitment and the overall feasibility of securing funding for the Chinese lenders. So why is it that there is a delay in the process? The delay could be attributed to several factors. One of them is activist campaign. Environmental and climate activists have raised concern, prompting these lenders, especially SINOSURE and Exim Bank, to slow down the financial process. Then there is some demands that the bank has made. The lender has demanded a thorough due diligence, including environmental and social governance issues, revenue sources, shareholder roles, and reason for local and international interest. The process has prolonged the timeline. The lender also has engaged in internal processes where there is an assessment of potential risks which are associated with financing a project which is faces huge risks like this. The financing process for major projects like EACOP often involves intricate internal procedures within financial institutions as well as government agencies. Some of the possible internal procedures that could be affecting EACOP: one, we have due diligence in terms of environmental and social governance assessment, where SINOSURE as a lender might be conducting extensive due diligence on the project compliance with environmental and social standards. So delays can occur if there are concerns or additional measures that are required to be met. Then there is financial viability and risk assessment as part of due diligence, where the lender might evaluate financial health of the project, assessing potential risk and returns. Complex financial structures, uncertainties in the project, in projections or perceived business risk may have led to this delay. Then there is the issue of compliance and regulatory requirements as part of due diligence, where the lenders may need to ensure that the financing which they are going to do aligns with international regulations and standards. Adhering to this requirement might involve additional documentation and negotiations which Uganda must provide. Then there are internal approval processes where committees and boards need to meet to approve significant financial deal like this one. So delays may occur as these committees need to carry out a thorough review of the project details and also assess potential impacts, and this could have been the cause of this delay. Then there are risk mitigation strategies as part of this process, where as you know, the project faces environmental and social concerns, and this may have required the bank to implement specific risk mitigation strategies before making a decision. Then there are contractual agreements which need to be signed, negotiations of contractual terms between the bank and also the project stakeholders, including Total Energies, UNOC, Tanzania Petroleum Development Company, and this can be time consuming. So terms related to interest rates, repayment schedules, and also collateral or such kind of components may require careful consideration, and this may have caused the delay in making a decision. Then the global economic and political factors, where the world has changed a lot, and this could potentially affect EACOP financing in several ways. The increased uncertainties, global shift, where there have been rising geopolitical tensions, trade conflicts, and even ongoing wars could create a more uncertain global investment climate, making international lenders and investors cautious about committing to large-scale projects such as EACOP. Internal political development as well, especially in China, such as leadership change, shift in economic priorities, could also lead to reduced focus on overseas investment, leading to delay in making a decision. Then there are concerns about reputation, mainly due to environmental concern and also social and human rights issues. So potential mitigation strategies: there is a need for increased transparency and stakeholder engagement. EACOP may need to come up with mitigation measures that will convince the lenders that this project is truly has minimal impact on the environment and social aspects. The extent to which these political changes will ultimately affect EACOP financing remain to be seen. While China's increasing role in the project provides some assurance, the growing uncertainty and the reputation risk associated with the fossil fuel projects could make securing of financing more challenging. The project success in navigating these risks will likely depend on its ability to address the concerns as well as adapt to changing circumstances. However, it's important to note that this is a complex issue with a variety of perspectives. Some may argue that the changing political landscape may present an opportunity for EACOP to securing financing from China that may not have been available in previous administrations. Others may argue that the risks are too high and that the project should be abandoned altogether. Ultimately, the decision on whether to finance or not this project will rest on SINOSURE and also other investors who will need to weigh the potential risk and carry out proper due diligence and reward carefully. So the other question that we're asking ourselves is, what should Uganda do to expedite the funding approval from SINOSURE? So to expedite the funding approval, Uganda could consider the following. One is engagement and assurance. It should continue engaging with SINOSURE to address concerns that they have raised and also provide assurances regarding environmental and social governance, as well as risk mitigation and project viability. They should complete financial agreements promptly to unlock funding by the specified deadline. They should push for that. And then they should enhance public relations efforts to showcase the project benefits, address environmental concern, and also demonstrate a commitment for responsible oil development. Then there is aspect of diversification, where they can explore alternative funding sources or partners to reduce reliance on SINOSURE. So this, given the developments that have taken place, especially on the environmental concern, where the project faces criticism due to potential environmental impact, particularly as the world's longest heated pipeline. Activists are arguing that heated pipeline pose threats to major rivers, swamps, wetlands, and forests. Then there are global financing shift, where shift from the Western Bank to Chinese lenders highlights the global challenge in financing fossil fuel projects. Western banks are faced with pressure from climate activists, leading to reliance on Chinese financing for EACOP. There are revenue sharing concern, where there are hints that Total Energy may need to finance a significant part of this project if funding is delayed. This raises questions about potential negotiations of revenue sharing agreement, a scenario that officials deny but analysts speculate about. Then there are liquidity challenges. As the debt financing component faces delay, questions are arising about how long the project can sustain operations on available liquidity from equity funds and the loan from other sources. Then there is debt equity structure, where EACOP financing structure involves a 60% debt and 40% equity. With the debt estimated to be $3 billion, the delay in securing this debt financing will impact the project health, and this may lead to further delays. So in conclusion, we can say that EACOP is facing a monumental situation, where it is facing environmental activism, and now the global financing dynamics, revenue sharing complexity, and also liquidity concerns. So Uganda ability to navigate through these challenges and also secure funding from SINOSURE will significantly impact the project success and the broader landscape of oil development in the region. So it will be important for Uganda to expedite what is required on its part to ensure that it secures these funding, as without it the project might stall. So thank you for reaching this far. If it's your first time here, please consider subscribing to this channel. Watch other videos that you have done on different areas. You can leave your comment and also hit the notification bell so that whenever you upload a new video, you are notified. Thank you.